Hi everyone, thanks for clicking on the video. Today I'm going to go over how to build this 3-year financial forecast in Excel. And this is the summary tab. I'm going to go through the rest of these tabs, but before I do that, go ahead and go to the subscribe button down in the right hand corner. Subscribe to the channel so you can check out the rest of these videos that I have available. And while you're at it, go ahead to the AccountingExL store. Check out what we have available. If you are an accountant or a small business owner, it's really going to help you out, and all the links are in the description. Alright, so let's go ahead and get started. So the product company file is available at the AccountingExL store, and the link to that is in the description. Just going to go through the different tabs here. So we have a summary tab, a balance sheet tab, an income statement tab, statement of cash flows. We've got an assumptions tab, and then the sales forecast and revenue, sales forecast or cost forecast in dollars, and then our sales forecast in units. And then we have a tab for our SG&A expenses, and then a list tab which just has some general information that is used for some drop downs and things like that. So just want to go through the balance sheet. You can drill down into different quarters. Just clicking on the minuses and pluses, drill down into different years, so you can analyze it however you want to analyze it. Same thing with the rest of the tabs. Income statement and statement of cash flows, you can drill down just like that. Same thing with the summary. You can drill down, look at it by month, look at it by quarter. So that's really convenient. So just want to show you a transaction real quick so you can kind of see how everything flows through. Just going to enter a transaction into the sales forecast units, and this is kind of where we're going to enter most of our information here. So I have product 1, and I'm just going to enter a sales price for my first product. So just going to put in $21 per unit, and then the cost for that item is let's go with $6, and then our estimated sales per month is going to be, let's go with 21 here. And then here you're just going to select your frequency, so monthly. And if you wanted to put in a sales rep, I'll just put in some initials for now. And then the start date is going to be 1/1/20, end date 12/31/20. So it's going to calculate all of your sales in units for the entire time that you want to calculate that as part of your revenue. And then what that does is it rolls up into your cost forecast, which converts it into dollars. So this is the amount of dollars for those 21 units. That's the cost of those 21 units every month is 126. And then your sales dollars and revenue is $441 a month for that product. And then from there it rolls up into your income statement, where you can see that it shows the revenue for every month that you have it, and then it has the cost of revenue for that item for every month. And then that eventually rolls up into your balance sheet, populates your balance sheet, and then your statement of cash flows and your summary. So you can see, drill down into it and see what your sales are right here, and your balance sheet, the effect on your balance sheet, and your cash flows. So I'm just going to go over here and back that item out real quick so that we can set the file up. So to set the file up, the first thing that you're going to do is come to the summary tab and just enter your company name right here. So what we're looking at here for today's example is we're just going to start a little t-shirt company where we sell t-shirts online, and our supplier supplies all of our t-shirts for us, and that company supplies all the t-shirts and does all the shipping, takes care of everything for us. So we're just going to enter the company name here. We're just going to call it t-shirt company LLC. All right, so now you can see that flows through to the rest of these tabs. You just enter it in one spot and everything flows through. And then you're going to select your beginning date here. So this is a drop down. You just select whatever year you want your forecast to start with. So we're going to keep it at 1/1/2020, but if I also switch it to 2019, it takes care of all your headings for you on every tab, puts everything in the right years for you. But we're going to go ahead and switch that back to 2020. All right, so the next thing we're going to do is we're going to kind of look at, but we have to start with our opening balance sheet. So there's a spot here for the prior year's ending balance sheet. So this needs to be completed for everything to populate properly across for your balance sheet. And then the next thing that we're going to do is come to the Assumptions tab, and we kind of need to think about what our accounts receivable collection assumptions are. So for this business, what we're looking at is we're looking at t-shirt sales online, where there's an online platform, and to order the t-shirt, the customer has to enter their information, enter their credit card information. So there's not going to be very much accounts receivable for this forecast. So what we want to do is we just want to put 100% of our accounts receivable will be paid at the sale. And so what that's going to do is it's going to feed into our accounts receivable projections here and help us project out what our accounts receivable is for this company. If we were to change that assumption and put within 30 days, maybe this is 0, maybe this is 60%, maybe this is 35%, and then we have an additional 5% collected within 90 days, that's going to have an impact on our accounts receivable projections. So it's just something to keep in mind, and it's really going to help automate the receivables projection. So we're just going to keep this at 100% for this file. The next thing that we're going to do is look at the prior month's revenue. So this is also going to have an impact on our accounts receivable, because we need to calculate our beginning accounts receivable for January. What's been collected in January? Well, we might have collections from September, October, November, December that we need to incorporate into what we're going to project out as our accounts receivable. So if we had any revenue in those cases, we would want to enter that information here. But since everything's paid at sale, we're not really concerned with that for this projection, because all of that would have been collected in the month that you made the sales. So we're just going to leave that at 0 for now. But let me just show you real quick what would happen if we did collect 60%, 35%, and 5%, and say that we had $1,000 of revenue in December, $1,000 of revenue in November, and $1,000 of revenue in October. If I come back to the balance sheet, that's going to populate what my accounts receivable balance should be on January and February. So that's just kind of how it works there. But we're just going to leave these zeros for now for this company. Okay, so the next thing that we want to do is enter our assumptions, and that's all your assumptions are going to go right here. So I've already thought this file through, so I've already come up with some assumptions. So I'm just going to go ahead, for the sake of time, and copy and paste those in there. So let's just go through them here real quick. So we're going to start this company. It's a startup, so we have $0 in annual revenue right now. We're going to grow it to a $260,000 revenue company by 2022. We're going to have 30 different products There's going to be a mix of shirts, mugs, phone cases with logos that are printed on them, and selling them on an online marketplace like Amazon. And we're going to grow our monthly sales from 0 to approximately 1,600 units by the end of June 2020. And for expenses, our cost of sales include the cost of the item, the cost to print the item, and the cost to ship the item. So that's what's going to go into our cost of goods sold. And we're going to price the items. We think we can get a 61% margin on those, so that's how we're pricing everything. And the owner is going to be paid a salary of $8,000 a month. We've got office rent of $750, and other expenses, including software and insurance, is about $700 a month. Interest expense on the line of credit that we're going to try to get is 8%. Our customers pay, like I said, up front at the point of the sale. And our accounts payable, we're going to pay all of our invoices basically on automatic draft as everything is incurred, so we're not really going to have much accounts payable. And then we're going to try to get a $60,000 line of credit to cover the salaries and expenses until revenues and profits can sustain the business. And all of our debt's going to be paid as soon as possible. The owner's going to contribute $20,000 to cover the initial cost, and the company's going to maintain an equity balance of $100,000 once it's accumulated. So those are kind of our assumptions. So now that we have those in place, we can kind of create our forecast. And so what we want to start with is our sales forecast. So what goes into our sales forecast is our sales in units. So I'm just going to enter a couple of them in here so that we can kind of see how everything flows through. So to start, we're just going to leave these product names as product 1, but you can change these to whatever you want. And this goes all the way down through 1,000 lines, so you can enter up to 1,000 products. So the first one we're just going to enter is product 1. We're just going to go with a sales price of 21. And our sales forecast, our sales in units is going to be 21. Our sales price is going to be $14.99, and the cost of that item is going to be $6. That's going to be monthly. Just going to put some initials in here for the sales rep. And then our start date is going to be 1/1/20, and our end date is going to be 12/31/22. And that's going to go out through the entire 3 years. This is a 3-year forecast. So it goes out all the way out through 2022. Monthly, we're expecting 21 units for this product of sales. So let me just go ahead and enter a couple more of these. So product 2 is going to be $11.99, and the cost of that item is going to be $5, and the number of units for that item is going to be 74 per month. Select monthly, enter our sales rep, and again we're just going to start that on 1/1/2020, and then that on 12/31/22. We'll just enter one more just so we can kind of see. So the next item is going to be $13.99. And the cost of that item is going to be $5.25. Number of units is going to be 90. I'm going to sell 90 of those per month. And we're just going to start that on 1/1/20, 12/31/22. So 90 units of sales per month all the way through 2022. So we've got a couple of those entered, and so then if we come to our forecast in dollars, we have our cost here per unit. It's going to calculate what our cost is every month for those units all the way through 2022. Same thing with our sales forecast. It's going to have the sales price per unit and calculate what the sales are for those units all the way through 2022. And then it's going to roll up into our income statement. So this is our revenue, this is our cost of revenue, here's our margin at 61%. And then that's kind of how everything rolls up there. It flows through all the way down through net income and comprehensive income. And then those flow over to the balance sheet. So you can see the cash that we have and the accounts receivable that we have for those items. So real quick, you notice that there's accounts receivable here. And I wouldn't expect that because we get everything paid up front. So we must have an error somewhere in the assumptions. So if I go to the assumptions, I still have this 5% here. So I need to take that out to 0. I take that out to 0, and now I don't have any accounts receivable, which is what I expect. Real quick, something I want to touch on is our beginning balance sheet. Typically we would need to update this with our beginning balance sheet of 2019, but since we're a startup, we don't have anything in the balance sheet as of yet, so everything's 0 for now. But if we were to enter anything, we would start with entering the beginning balance sheet. That's going to have an effect on those balances going forward. So I just entered $1,000 there. That's going to change everything going forward. And then down here we need to make sure that it's balanced. So I'm just going to enter in $1,000. I contributed $1,000 to the company, and we have $1,000 of cash. So our balance sheet is balanced, and it has an effect on everything going forward. But for this, we're just going to leave it at 0. Okay, so I entered a couple of those transactions in there for our sales forecast in units, but we're going to go ahead and continue to build the rest of this forecast. So I'm just going to copy and paste in the rest of these units. So starting with the sales, I have some more products to enter. I'm just going to copy and paste those in real quick. That's my sales. Here's my cost. And then my sales forecast in units. And then everything, all of these are just monthly sales expected. I'll go ahead and just copy down the rest of my sales rep and then enter in my dates. Copy and paste those in. So you can see with different dates, different start dates, it's going to calculate based on whatever start date that is. So now that we have all of our items entered, we can come over here and see how everything flows through here. So cash forecast, or cost forecast in dollars, sales forecast in dollars, and then it rolls up to your income statement here, and has your cost of revenue here, flows down all the way through income, prepares your statement of cash flows, and your balance sheet. And if you look at your summary, it flows through all the way to your summary, so we can see what the cash is at the end of 2022, matches what our cash flow says at the end of 2022. All right, so we have our cost of sales in there. We have our sales in units, and we have our sales forecast. The next thing we need to do is update our SG&A expense forecast. So that is very similar to the units, except it's a little bit different in that we're just calculating expense. It's not based on units, it's based on monthly salaries and things like that. So I'm just going to enter a couple of those so we can kind of see how it flows through to the end. I'm going to start with the owner's salary. And that's going to be $8,000 a month. The start date on that is going to be 1/1/20. The end date is going to be 12/31/22. So you see it populates everything, $8,000 a month all the way through to the end. And we'll put in some office rent. That's going to be $750 a month. And start that on 1/1/20 through 12/31/22. $750 a month. And let's just do, we have an Office 365 subscription, and that's going to be $450. And that's just a one-time expense. You know, we pay that in March every year. So you can see it's just going to put that in there one time instead of spreading that all the way through on a monthly basis. All right, so let's check and see how that flows through to the income statement. So now you can see down here the selling and general administrative expenses. We have something in there now for SG&A, and that flows through to income, balance sheet, statement of cash flows, and flows through to your summary. Here's your cash at the end of the year, or at the end of 2020, and this is your statement of cash flows, cash at the end of 2020. So that's a nice check to look at just to make sure everything's flowing through properly. All right, so I'm just going to copy and paste the rest of those SG&A expenses in there so we can save some time. Okay. So now that flows through all the way to the income statement. And what we're going to do next is come back to the assumptions, because we have all of our, basically we have all of our income statement items accounted for, our revenue, our cost of goods sold, our expenses. And we're going to come look at the balance sheet. So we're thinking about getting a $60,000 line of credit. So that needs to be updated on the balance sheet, and we're just going to update that directly on the balance sheet for this forecast. So we're going to come down to liabilities. We have here long-term liability 1. We're just going to call this line of credit. I just want to show you, whenever you update these balance sheet accounts, that's going to show up on your statement of cash flows as automatically updated. So here, cash flows from financing activities, since I entered that line of credit, it's going to update the statement of cash flows with your account names. So just a little automation right there. But we were thinking about getting this line of credit, and I think we're going to try to get this. I think we're going to be able to get it by the end of February. So we're going to go ahead and enter that $60,000 line of credit in here. $60,000 line of credit. So you can see when I enter that, we had some negative cash here. But we need that line of credit to keep our cash balance positive. So as I enter that, it's going to create our positive cash balance up here. So we had a couple of different things on our assumptions. One was the $60,000 line of credit. The other was that the owner was going to contribute $20,000 to cover the initial costs, and then the company's going to maintain a $100,000 balance once it's accumulated. So what we're looking for on our balance sheet is we're looking for this line of credit is going to be $60,000 until we get enough cash in here. Then we can start paying it off, and then to start up, we're going to put $20,000 in from the owners down here in equity. So we're just going to copy that across the entire 3 years of the forecast. And I need to open that up so I can put it in here. We're just going to do this all the way through to 2022. Okay, so we have that entered in there. Next thing is we're going to try to build this cash balance up until we get to $100,000. So we're using our line of credit. Almost there, we're at 98. Okay, so we're at $100,000 now. So we got there by the end of 2020. which is pretty nice. So we're just going to start looking at, do we want to start paying this off? So we can do it now that we have our cash balance established. So maybe I want to pay off $15,000 of this line of credit starting in January, so this balance is going to go down to $45,000. And then maybe I want to pay off another chunk of it, so maybe it comes down to $30,000. So we're not maintaining this cash balance up here though. So maybe I don't want to pay any here because I want to try to keep this at 100,000. Okay, so now we're back up to 100,000. Let's just go ahead and put in 30. See what kind of cash balance that gives us. All right, so I'm starting to get over 100,000 again. So maybe I want to pay off another 15 here. So now this cash balance goes down to 15,000. All right, so we're getting up there again. Maybe I want to pay off the rest of it, because now I have that $100,000 cash balance. So I just paid off the line of credit, and now I have, my cash is still building up through 2022. So maybe I want to start distributing some of this money to myself. So I come down here to distributions, put in $10,000. Maintain that $10,000 balance until that cash builds back up. So maybe this I put in, distribute myself another $10,000. So then that balance goes up to 20. 25. So I'm distributing $5,000. So it's going from $20,000 to $25,000. What that means, I distributed $5,000 to myself. Okay, so I ended up distributing myself $45,000 out of my company, and I still have $100,000 of cash in my company. I paid off my line of credit, and so everything's all settled now. So this is how everything looks once it's done. So I have my balance sheet, it's balanced every month, and I have my income statement, all of my income throughout the year, all the way through 2022. And I have my statement of cash flows. So I have, starting with my operating income, cash provided by operating activities, investing activities, finance activities, my change in cash. And I come to my summary tab, and got my balance sheet is all balanced. My cash, on my cash and cash equivalents, matches my cash and cash equivalents at the end of 2022. And matches every single time. And so the last thing I would want to do is kind of hide some of these things to make it look a little bit nicer. So I'll do that real quick. Okay, looks really nice. So now I'd be able to copy and paste this. If I was doing a presentation or if I was putting together my business plan, I could copy and paste this into that presentation or that business plan. And that's really it. So make sure you subscribe to the channel. Check out the links in the description. The link to this file is in the description. I also have a services company video that I've put together, as well as a services company financial forecast. So if you're a services company looking for that, check out that video. That link's in the description. And we'll see y'all next time.